Pickleonia.
Good morning, everyone. How are we all doing today? Buckle up, John. Welcome to Cornishon. Everyone, say hi to Buckle Up, John. Good afternoon, guys. Yeah, the weekend's going okay. Stream started this morning, intro ended this afternoon. It's only like 7 minutes. As we get closer to the actual split date, is internalization affected at all? Not really. No. Not sure how I got kicked off. Girk, what did you do? I didn't do anything. Maybe you like got a new credit card or something, or the old one expired. I have no idea. You gotta join yourself and link your YouTube to your Discord to have access to the country club. Yeah. Member inflation more detrimental than US dollar inflation? Maybe. No, you know better than that, Lawrence. I blew up my paper trading account. Is that good? I mean, it's better than blowing up your real account, right? How does OI look after Friday? Still don't know till tomorrow morning. That's gonna disappoint a lot of people in here, but yeah, I mean, the actual OI updates tomorrow morning. The what we have from Friday, like Jay Fresh's preliminary analysis, you know, we're still in the same position. We have to see how much of the market maker hedge is going to be dropped going into tomorrow and Tuesday. What's up, Dominic? Longest hat drying process ever. I actually have the hat over there. Is there fear that our cycles have now turned to be monthly rather than quarterly? Seems like we're having these short bursts to $150 a month when we used to run big every quarter. Yeah, I mean, that's partially the effect of these obligations compounding and becoming simply too large to clear all in one quarter. We see that with, you know, and the low liquidity available, right? So every one of these events, they are getting less and less liquidity out of. Like if you look at GME entropy over time, you know, back in January we were having these huge runs, right? And then it dwindles down into November, right? And then March kind of comes back up again, but then May is almost nothing, and June's really tiny. So, you know, over time, every time they have an OPEX, they get less and less liquidity out of it. Um, this means that, you know, it's becoming harder and harder over time for them to consistently generate enough liquidity to keep this going an entire quarter. And so if it doesn't go an entire quarter and they need to generate liquidity in between, you know, we're going to get more runs. Real quick, how important is this? And are we still poised for OPEX, right? How important is what, BMG? The negative hedge? Very. What are we going to learn today? I don't know. Before you start, can you tell my, it's not like I have a syllabus. Can you tell my mother that you were not in the shower with me Friday morning when she stopped by and heard your voice coming from the portable speaker on my bathroom vanity? J Dog's mom, I was in the shower with him. It was steamy. I see a lot of fear. Good indicator for OPEX VWAPs. Could be. Yeah. There's a lot of uncertainty, right? And that's on every level. So, yeah, fear, uncertainty are generally a good indicator for something happening. Half of the people will be right and half will be wrong, though. Quick, real quick, how important is it? This week we're still opposed. Okay, options chain after the split will be standard and not non-standard chains, right? Yes, they're just doing a straight split, so we're not getting a separate chain. So you think that they can kick from June and July OPEX will overcome the positive hedge from last week? We don't know. We've never really had this situation before, right? It's new. Um, Potentially. I think so because I don't think that the market maker hedge, however grossly positive it is equivalent to the obligations due. So I'm bullish, but I'm very reserved in my bullishness. I'm not going to take a lot of risk. I'll have plenty of time to take risk when GME options are fucking 1/4 the price, right? Do June OPEX obligations have to be covered this week, or is there another plausible way they can be boofed further out? No, I think they need to be covered this week. There's problems with that assumption though. Or well, the one you're trying to make, I think, which is that we don't know the extent of June obligations, right? We know how many puts were closed on XRT. We don't know how many of those shares are GameStop. We never do, right? It's just a volumetric closing of put positions, and that precedes runs on GameStop. Um, but the exact quantity of obligations due is an unknown, right? It could be 90%, it could be 50%. Um, so even though, we have volumetrically like 130,000 puts closed for the June OPEX that we never saw price action from, we don't know how much of that is actually GameStop. We know some of it is, because GameStop's an XRT. And usually it's a lot more than what it's weighted at. But remember, July obligations aren't that high. So it's really like June and June put together, kind of, and less like Feb and March put together. Because March was huge. March had a shitload of obligations. But we also have FOMO this time around, which could be, a lot different. We'll see how it comes in. I think a lot of people are scared to get in too. The June OPEX obligations have to be covered this week, or is there another possible way they could boof out? I don't think there's a way for them to continue to carry them out. My friend recently moved to New York City and got her packages in the lobby broken into. She left a message requesting her goods to be returned. What are the chances she gets them back? I mean, I don't know who stole her packages, but usually you can file a claim with the shipping company or something. That used to happen to me at my old building all the time. You just like tell them and they'll send you a new item, or like they have insurance on those. Sometimes you have to like file a police report. Theoretically, we could be starting from a lower price point due to the positive delta hedge, correct? I mean, not necessarily. We may start from this price point, but we may not run as hard because of the positive hedge. So usually, yeah, we start low, but we also have acceleration because of the closed puts. And this time we know that we're going to have, two opposing trades occurring, which is going to, net. And that's not like, we don't want netting during our covering period. That's what like me and JFresh are cautious about, right? Like that's the crux of it is, we're not starting with all those puts closing off, and that could be bad for us. I mean, we have a lot of puts closing off on XRT, but not GME, right? Usually we have them on both. Great news. Core's YouTube revenue has crashed drastically. He only made 415 in the last 7 days from chats, losing 1K subs a week. Damn. J-Dog put their pickle back in my jar. Before you start, can you tell my mother that you were not in the shower with me? Oh, I already read that. Does BBY have negative or positive hedge? Same as GME? Negative. BBY definitely has a negative hedge. The market maker's even pricing puts like in excess of calls. Will increased liquidity due to the split limit future cycles, or could increased options interest at lower stock prices have a positive effect? If people don't sell, if people keep buying and holding GameStop, I do not see a reason for the cycles to stop. If people get 4 times as many shares and they're like, oh, I can sell some and still own a bunch of GME, then it may not, right? So we'll have to see what happens. Theoretically, nothing should change because all that changes is the size of the float, not the ownership of that float. JFresh still bearish? If so, I need to buy more calls. I think part of it is JFresh is being overly bearish in an effort to make people realize what's going on is not the most bullish situation we've approached with GME. Believe it or not, and we probably shouldn't, but we do worry about all of you fucking people losing money. And ultimately, we know that we can't do anything to prevent that, but we can advise caution and risk management, and that protects people. I mean, if you compare losses from Freg's Day to June NOPEX, I mean, it's not even a comparison. Even nobody was prepared for Freg's Day, right? And with June OPEX, risk management was a lot better. And hopefully going forward, as we move into more of these cycles and more of these price volatility events, people will pay attention to their risk management more and more, and losses will be minimized because that's the goal. Making money is great, but losing no money, that's really important. So if OPEX is NOPEX, do you think it'll be just flat or just down? Well, it'll be flat and then people will give up and then it would go down, right? Would you say this is the most uncertain you've been since covering GME? Oh no. There've been like fucking we were super uncertain back in August because we were just trying to like figure out the cycle theory back then. Um and like we thought we were going to get one, right? We bought a shitload of calls, but we really had no idea if it was continuing or if it was dead after the share offering. Um, so I think that was actually the most uncertain we've been. Feb was pretty uncertain, because we didn't realize what was going on. Like we at one point we thought they'd just covered and that their obligations were super tiny, but it made no sense because they'd been compounding them for 3 months, right? Um, and we didn't really fully understand the steps that they could take with like SEC 15C3 and stuff like that, and the deferral processes. Not that calls to FINRA really gave us any additional information back then on that, but over time, we started to figure out more and more. So I think if anything, every cycle is higher confidence, at least in our understanding of what can happen. And but with that, comes understanding that what can happen may not be positive. I might or might not have half ported into Goog L shares and 2 calls. JK, I definitely did when rich. I bought some too. They were expensive. I'll probably get out Monday. You got Goog L though? I don't know. I got into Goog like the class A shares because I think the volatility is going to increase. When the chain is splits, do we expect to see people sell out of certain strikes and migrate to new post-split strikes? I'm trying to weigh up if pre-split far dated calls are more or August 19th calls sell if hold on. That was a whole lot. And okay. When the chain is split, do we expect to see people sell out of certain strikes and migrate to new post-split strikes? Possibly, yeah. You'll have some like off strikes, like 50-cent strikes and stuff that people probably won't want to hold on to, and you'll see a liquidity move. I'm trying to weigh up if pre-split far dated calls are the move, or August 19 calls sell if no pecs and enter long dated calls post split. Yeah. I mean, August 19s are probably more than sufficient theta to cover the next week, right? And still get out with a lot of your contract value. But we will see liquidity move around in like off strikes that are like what like 0.5 cent 0.50. Like these may lose interest as people move into even dollar strikes. So like a 160 call or a 200 call, those will split to even strikes. But like a 250 call won't, right? So if your strike isn't cleanly divisible by 4, then, maybe consider a different strike. Best answer ever. Thanks. How are you approaching setting stop losses for calls? In the past, you said you've only set them once we hit GM, but playing more cautious now, are you setting immediately 15, 20%? Yeah, I have like a pretty wide trail in place that, I'll adjust on the fly if I need to. Right now it's like for the calls I have, it's set really far, really wide, right? Because I have like they're just volatility plays. As I buy more and more higher delta calls though, I will be putting stops in place for any potential rug pull scenario or a down pricing of the chain like we saw in June. And then, as we move up, I can tighten them and adjust them as we approach resistance levels and price targets. Do you think they will still short hard after the split? And also, OPEX being done, what are the signs to look for beforehand of them shorting hard after the split? Um, I mean, I don't know what the answer you want here is. I mean, the price dropping, right? Volume on volume, that would be bad. That would, does after the split, that doesn't necessarily indicate shorting. It could just be people selling. But generally speaking, we see, large in the money put volume. That's usually our best indicator of them starting to push the price down. What are the best days to see the run? Monday, Tuesday, Wednesday. High volume and a move up. How do you feel about the new indicator you're using towards the end of last Friday? Oh, it needs a lot of work. It's really interesting. I think it's got a lot of potential, but methods like methodology needs to be constructed around it. Um, it needs back tested for that methodology, so it's a process, but it's exciting. I'm pretty excited about it. Do we expect to see people sell out of certain strikes? Oh, I think I got this one right. Yeah. What usually happens when GME IV spikes? What about when IV drops quickly? What kind of questions are you asking? What do you know what usually happens when GME IV spikes? Well, the price goes up on high volume. When IV drops quickly, usually the price goes down on very low volume. Are you just asking me how IV works? Because it works the same on GME that it does on everything else. So BBBT? BBBY? What about Bobby? Can you walk us through the scenario a naked short is walking into this week? OPEX and split implications on naked short positions. I don't think naked shorts really give a shit if they're just naked short. Their lender is going to rebalance their agreement due to leverage risk, whatever percentage. They may have to pay a bit more to maintain that leverage, but I don't think that it'll really change anything there. ETFs could pose a concern, especially in the way they abuse them in order to create synthetic liquidity. Because ETFs have a pro rata agreement with their shareholders, that the ETF will, in kind, obtain control over all dividends issued for shares in their underlying net assets. Or their underlying assets. So essentially what that means is if a dividend is distributed on a stock in an ETF, that dividend is distributed in kind to the ETF holders. In the event of a share dividend, that would mean that an ETF holding 1 million GME would need to be holding 4 million GME by the next time it is reconstituted or rebalanced. And I think that is the only point of risk for a naked short going into this split scenario. Like real risk of a recall. And we may not even see that until the effective date or after. The ETF can write forward contracts and push it out, a whole nother quarter. So, HODL? That's what I was gonna say. If Feb was so uncertain and fudded, it was Freg's Day, December, Jan, Feb, misses. Loading calls at 77 in March was fucking sketch, but VWAP that ensued feels the same now. Yeah. Unlike last OPEXI. We're going with the Greek. This was one that had been loading up on options beyond July 15th. This one, no one has been loading up on options beyond July 15th. Do you think this is due to the fear of the split? It seems like most people did their split plays last week. Well, I mean, I think most of our options interest that Jamie is carrying further out on the chain at any given time is institutional, right? Like our farther dated calls. And we started to see the effect of that in your data, JFresh, as soon as the split was announced, right? We started to, see no interest on the far dated calls in the options chain, even some leaving, right? So I think they took that May run and institutions bailed on their farther dated positions, probably assuming that the OCC was going to commit to a standard, like a standard split of the options chain, which would have meant that a new chain would have been formed, right? And now they just have no reason to reposition until after the split chain opens up. Especially if they're going to be selling contracts and making markets, they're going to want to wait for that improved volatility in the new chain before we start to see that liquidity come back. And so that's why I was kind of shocked at the OCC's announcement, because they should have created two separate chains. That's the standard. And so when the OCC put out that memo, that must have been just as confusing for all these long positions as well that have been bailing on the chain. But they still will probably wait until the new chain opens up to get back in. They'll also want to get in at like the psychological strikes. They won't want to get into like non-standard strikes at like because we're gonna have some at like what 237.50 or whatever the fuck it is. You're hypothetically going into a next week with no GME positions and 100K at your disposal. What percent breakdown of shares versus options plays would you enter? I mean, as a long-term investor or as a trader? As a trader, I would, probably approach it with like bull put spreads, but as an investor, I would probably split it like 80-20 or 90-10 between shares and options. Or I would wait till after the split because I think the price is obviously elevated right now. GameStop is not worth 141.64 a share fundamentally. So I would not buy it at this price, right? Explain Vega's sensitivity for those that are new. Explain like I'm 5 would be awesome. Vega is Delta for IV. So it is the rate of change that a contract gets on based on the increase or decrease in volatility. Much like delta is the rate a contract will, go up or down based on increase or decrease in the price. Would you say general rules for OPEX are 1? If a holiday same week, no OPEX. Well, no, not necessarily, because they don't have to apply for the extension, right? They could just fucking cover it. So I think that's a way that we could get sandbagged, right? It's probably best to not consider a holiday a guarantee of a move forward of the obligations. If volume is below 5K before 9 a.m., nothing is happening that day. That's not true either. Some of our OPEX runs have had very, very low morning volume. Usually not, but sometimes we do. I don't think either of those are good ways to tell if an OPEX is going to occur or not. I think the best way to tell is intraday volume. Intraday volume and price sensitivity to not only active funds but delta hedging. So if we're starting to see a lot of hedging going on, high interest in call and put volume, high volume breakouts, those are all really good signs that OPEX is good to go. But I don't think pre-market volume is like usually it is, but it's not 100%. And then as far as the holiday goes, there's no guarantee that they have to take advantage of that, right? And I think that's a way that we could get caught with like our pants down by not having exposure, assuming that because there's a holiday they won't run it, and then they run it anyway. Post split, does Jimmy become strong target for wheeling compared to now? Yes. Sure, it's opium, but it's realistic too. Yeah. By the way, guys, I know I'm 11 minutes behind, but I'm just trying to get to everyone's questions. So I will catch up eventually. So after this Monday to Wednesday OPEX, there is FINRA SI report a week after on Tuesday. And in the past, Jamie ran on FINRA SI report publication date. What are your thoughts on this? It hasn't run on all of them. And also, generally speaking, FINRA SI reporting is just the T+2 period after OPEX. I don't think it has anything to do with FINRA SI reporting. They don't run the stock to, report lower numbers, right? They could just hedge and neutralize the positions to do that. So I don't really think the SI report is tied to any price action on GameStop whatsoever. If it is, it's super minimal. Turb 23. All right, Harold, what is it? I was excited to see you so excited about it. Thanks. Any good backtesting software for free? Hmm. TradingView has some stuff that you can backtest strategies on. I think TDA, Thinkorswim's probably your best backtester for free. Or at least most fleshed out. Seeing you predict the future price action was pretty wild. So it can be predictive, but there's a lot of other elements in there that are well, frankly, I don't know how to read yet. I don't like I think we're looking at like high volume or like high frequency arbitrage. But there's no way to tell exactly what's going on yet. We need to do a lot more work on it. It does highlight its potential, which is awesome. You know, even a higher chance of a big volume spike coming in. Like, I know people that were telling me that they bought zero DTEs right before we like predicted that big volume pump, and it fucking they went from like $15 like 4, 5, 6x. So that was awesome. Is your strategy most likely to confirm there's a run in place with high volume than chase? I think I'll be put in a position where if we do move up on high volume, I will have to chase a little bit. Um, but I'm okay with that. I'm okay with paying a little more for the certainty, right? For the August 19th call chase, it seems like they added new strike prices for every whole number between 140 and 150, all with zero I. Do you find that sus? Not really. It's just because we're trading so flat. That's really normal, actually. When volatility goes down, they open up more single dollar strike prices. What do you think the rest of the market is going to do during OPEX this week? Think the Dow and CAT will be moving up. I'm not wanting to be full port into GME this time around. I think CAT looks good. I'm going to write about that tonight. But yeah, I do think that the market looks good and very little economic data this week. What's up, Girk? I hope you're excited for OPEX. I sent you a DM in Discord with my call spread. Could you look at it and rate it on stream? Well, love you. Bye. Yeah, I'll take it. I'll take a look at it, Sahib. Where is it? Bull call spread 350, 354. Is this it? Wait, no. That's the image. Sorry. Okay, so you're looking at buying 150, 160, 180, and 200. 3, 3, 3, 3. 200 on 8.5. I'm not sure how I feel about the 8.5 200s. I guess you're targeting those as like a delta sensitive. You know, those have, for more money, they have worse Vega sensitivity than 950s do, right? Like the August 19 200s are, they have better delta sensitivity and better Vega sensitivity. Also, you don't have this risk on the bid ask spread that you have with the 8.5s. The 8.5s have a bid ask spread of greater than 16%, which is kind of crazy. I really don't like the weekly calls. I mean, like, you're almost better off if that's like, if you're trying to like get a cheaper option, right? You're almost better off with like weeklies or bi-weeklies, so you don't have as much risk on the spread, right? Which would be what, the August or the 22nd or 29th calls versus, you know, the August 5ths. But the rest of it, like the August 19 position, I like. Like, even if it was just like August 19, 160, 180, 200, um, I think that would be better than what you're trying to do with these August 5th calls. Or if you're gonna do that, I wouldn't do the out of the money for August 5th. I would do the close to the money ones for August 5th. Like the 150s, 160s. And then, you know, the 180, 200s, I would probably have the further dated call on, because then you're gonna have better Vega sensitivity, even though you're further out of the money. CMIL, I'm gonna cover cat tonight. When you say MMs have positive delta hedge going into this week, you mean Jamie's price above DN? How much does this dampen the potential for a run? It depends on how hard their delta hedge sheds and how many obligations have to be covered. But you know, that is a netting position, which means no price action, right? If ETFs are buying and market makers are selling, nothing's going to happen to the price. Like, we'll have volume, but not a lot of price improvement. If one of those, you know, is of a greater quantity than the other, then that will make all the difference in the world. But say we have, you know, try to think of it this way. I'll posit it a different way so it's easier to understand, maybe for some people. Say the market maker is going to sell 3 million shares Monday, right? And ETFs are going to buy 10 million. That means that, you know, after this period of flat trading due to the netting of these two positions against each other, then the ETF is buying 7 million shares. But this is a significant reduction in the amount of, you know, this is a 30% reduction in the amount of volume that we expect to climb on, right? And yeah, sure, 10 million shares, 7 million shares might not seem like a big difference, but it is. And you know, without the market maker buying into this, you know, the ETF can settle out these shares much more slowly on lower volume without the competition. Normally they're both competing, right? The market maker is negative like 3 million shares and the ETF's buying the 10 million shares, right? So now we have them competing against each other in the lit exchange for shares of GME cheaper, which creates price acceleration. August 19 call chain seems like they added a new strike price for every whole number. Okay, that's perfectly normal. Sorry, I'm trying to catch up and also not miss. Would 1 month of Bloomberg terminal data be worth it? No. To try if we all pitch in for the plays. Yeah, I really don't think it's going to improve our ability to pick plays. I have access to Bloomberg if I need it, and I barely use it. It's really, you're really not going to get anything out of it. Not unless you're buying, you know, all of the data packages that come with it. And if you're doing that, you know, you're spending hundreds of thousands of dollars. Like, the terminal itself is 25,000, but that's just the basic data set. When you start adding additional data to it, you know, you have to pay for exchange data to be routed through your Bloomberg terminals, which, you know, you essentially need to be a hedge fund for that to be worthwhile. And even they're, doing everything in their power to create their own alternative, data aggregation in order to save money, which is what we just started doing from the start, right? Because we knew we would never have access to that data. So we just made our own. Are DTCC and NYSE able to determine when the share dividends are distributed? There's a due bill date. I believe it's the 25th for due bill redemption. The due bill redemption date is the 25th. Brokers don't have to deliver shares by then, but they're supposed to. If they fail to deliver shares by that date, then they may have to pay a small fine, unless they have a reasonable excuse. As I am now a person who manages risk, can you tell me a little bit more about how you determine ranges for trailing stops? I use Fidelity, so my trail has to be a dollar amount instead of percentage. I mean, just use the percentage, right? But set it as a dollar amount. So, if we're trading at 150 and you want a 10% trail, then you would set, your dollar amount at, $15 less, right? It's just, you just do the math yourself. On an options contract, same deal. If it's trading at $10 and you want a 10% trailing, you'd be setting it at 9. If you want a 20% trailing, you'd be setting it at 8. So on and so forth. Anyone tell Greg about Shkreli cores? Yeah, I said this before. I'll say it again. I don't want to watch an idiot and a criminal compete in a day trading contest. If I were Shkreli, I would just short everything Matt Kors buys. Any more insight of that volume spike we saw in the last hour or so of trading this past Friday? Seemed odd. It was interesting. Any more insight into it? Not necessarily. I mean, we're seeing puts closed on XRT. Those will all be closed come Monday. So we'll see what happens. What do we typically run on the 6th and 7th of months where we have OPEX? Was November 3rd a part of that or some other explanation? We run because of ETF FTDs in the earlier part of the month. When we have quarterly OPEXs. Remember, our quarterly OPEX was supposed to be June this time around. So normally we would have been running from ETF FTDs like right after May OPEX, but that all just got caught up in the price action of May OPEX. It's one of the reasons our price stayed elevated, is because we hit May OPEX, then we hit the FTD period, then we hit June OPEX, and then we hit another FTD period, and we're where we're at now, which is kind of an OPEX in the middle of an FTD period, which is actually really interesting because this hasn't happened before. We shouldn't be running in July, right? Like, if everything was being settled out in a standard fashion and there was no deferrals, we would have run in June. But as these positions compound, their frequency becomes, well, more frequent. Or the rate of frequency increases. There we go. I was looking at an option on the ticker O. Oh, okay. I noticed that they have a non-standard leap options expiring Jan 23, 24. I can't seem to find any difference between those contracts and the standard ones. Can you tell me what the difference is? Dividend, maybe? Or they may have been around before the split? Let me see. I don't have any options on O, so I'm not entirely sure. Non-standard. Yeah, I don't have any information on them. Corporate actions. They definitely weren't from that. Oh, I think there was a special dividend in November. Yeah, I'd look into that. ABVN. It was like I think there may have been a special dividend, so you have a split. You have some non-standards that are still hanging around. Do you see upside potential for upcoming earnings next week? Yeah, possibly. I'm kind of interested in Snap, especially. Netflix, yeah, I also see potential in that as well. I really don't like playing earnings, but if you buy far enough out, you can dodge the IV, so might be worth it. Hey, I was just listening in the shower. Can you please tell my mom you were in there and it wasn't just a man's voice coming from a speaker on the edge of the tub? Thanks. Post split, does GME become a stronger target for wheeling? Yes. On BBY, you kept mentioning huge puts, but when looking at the chain, calls outweigh the puts on almost every expiration. Yeah, they do. But the put gamma is very, very high on closer dated put or closer to the money puts. So basically, there's a huge wall of put gamma on BBBY that's keeping its price from rising. That and the market maker is not hedging the call side of the chain. But I'm well aware that the call side of the chain greatly outweighs the put side. They're suppressing the price. It doesn't take that many puts to do it, especially if the puts are being hedged and the calls aren't. On BBY, you kept mentioning huge puts. Okay, check DM. I sent you a link to my call spread. Can you rate it? Okay, I already did that. I know you started buying 150s, 819 on Friday. Well, you need to see Monday to buy more near the money or even at the money calls. I mean, if I see the things that would cause me to buy more near the money and at the money calls, I probably wouldn't be buying lower than 150, right? Because I'd be looking for volume and rapidly increasing price. And both of those things would probably price me out of, 138 or 145. So I would probably still be buying 150s, 160s, maybe 170s, 180s, 200s. Will you please think out loud through the pros and cons of short hedge funds wanting to cover now for July OPEX pre-split versus somehow can kick and cover? That's not how it works, man. They can't just somehow can kick and cover for August without a reason to do so. Don't forget, and everyone seems to constantly forget this, it is not to their disadvantage to cover these OPEX obligations. They want to. As a matter of fact, one could argue that they need to do it. If they can, leverage some better arbitrage, then it's worth it, right? But they failed to do that with June. We're now trading higher than we were if they just covered the June obligations in June. They would have done better than covering them now at a higher price point, right? So the only way you're going to see, them try to shunt those obligations into a future date is if there's an arbitrage advantage there. So they've been put at a disadvantage by moving June obligations forward if that's what we see occur. I don't know why people seem to think that they don't want to do this. The act of covering these obligations and clearing up all of this during OPEX releases liquidity. It allows them to short again. It brings the borrow rate down. It's a net benefit for them. You know, we ride the price up, but after that, it's terrible for our long positions, right? Because then we're stuck in a 2 to 3 month cycle of the price consistently going down while volatility drops. We're already in a recession and a bear market. Yeah, even though we've already dropped, I mean, you know, inflation is still high. The supply shock is not resolved. Lulu. I think we're gonna continue to see the effects of the supply shock because not only is it not resolved, the parts of it that are resolving very slowly, probably into the latter half of this year when it begins to hit retail the hardest, and then we'll start to see deflation, which is even worse than inflation, right? Like, the American market's really not built for deflation. Um, you know, that's when the pain of the currently terrible economy is going to start to hit the banks. um you know, once inventories are cleared out, once manufacturers, you know, the the ones that did, you know, build efficient systems for meeting demand, um start to recover, you know, we can start to see some growth return to the economy. But right now, you know, everyone's operating in the red, you know, and you're going to be facing a market where, you know, companies are competing to be more efficient in a smaller sector because you know the demand in the sector is going to drop so rapidly. So yeah, I think even though we've dropped quite a bit this year, we've dropped value, but the value was already just pure speculation. Now we're going to see, you know, companies really hurting, you know, becoming worth less. And that's going to be the remainder of whatever this recession brings, and, you know, the continuation of this inflationary economy. What are the XRT FTDs going to be realized? Biggest were on 6/21 and 22. Will that have any effect on July OPEX? Man, dude, you were just asking like 5 million questions today. Um, Biggest run 6/21/22. Will that have any effect on July OPEX? I think it's too soon to realize those. Didn't we just get the FTD report for the end of last month? Yeah. It's still too early for those. ETF FTDs are currently being realized from the end of May. So they haven't even gotten into June yet. That's like a month out, more than a month out. Could they be possibly be waiting to close the puts on Monday because they want to run it late? Close puts on Monday because they want to run it late. Possible. We'll see. There's not a lot of puts on the chain right now. It's kind of light, right? Meditation. I gotta get to other people's questions too, man. Um, and you've asked like 9 million, most of which have very little to do with OPEX at all. Like you're asking questions about July OPEX 2021, which was in the middle of the ETF rebalancing period. So, you know, 12 million shares of GameStop were being sold at market, or 8 million. Um, it's fucking nothing to do with today at all. We're not moving to a new index right now. Um, if we bought calls for Friday for this week, am I gambling or a professional trader? We'll see. Depends on how your risk management is. If you were a professional trader, you wouldn't have bought those calls till Monday, though. Interesting. So, how would I be better off selling 8.5s and switching them over? So, you'd be better off selling the 8.5s and switching them over for less contracts for 8.19, or more contracts with tighter risk for the 22nd or 29th. How do you feel about price action on CAT post dividend? Historically, it looks like there's some sell off after. I'm leaning towards taking profits beforehand, but I'm comfortable holding September 170s. Well, it's historically run really hard into the dividend date, right? So it's not so much that it sells off after, but more that, it just completed a large run and we're seeing a sell off. Like if you look at the previous dividend, it ran up really, really hard before it sold off into the dividend date. And it was already coming down from its high. Right now, we're just turning around on a low. And we could even see increased interest into the 19th. Remember, the dividend is Tuesday, is the ex-dividend date, market close. So, we still have 2 days where it could really rally before we see a dividend sell-off. And I don't think the dividend sell-off is generally negative. Like back here, we had some fluctuation in price, but ultimately ran up after the dividend. Here we started the dividend from a low point like we are now, and went up, shit, like almost $20. So I really don't think that like the dividend is necessarily going to create a sell-off. Especially at these low prices. I think if the market rallies and the Dow rallies, CAT's going to be a very attractive opportunity for a lot of investors over the next couple of weeks until we get to the Fed minutes. Don't forget CAT earnings is also coming up. You may get a better entry before earnings, though. That's a possibility. And their last 4 earnings have beaten expectations. I think they'll continue to do so. I think earnings, what's the earnings estimate for this quarter? 3.01. Not to mention you'll have the volatility increase on your contracts going into earnings. So if you bought in this low range and you gave yourself enough time, I think you're in a really good spot. I wouldn't try to reposition that. But it's up to you. Ultimately, it's your position, not mine. Wouldn't it almost be like 7 million shares versus 13 million shares? Because the 3 million shares would be added to the buy pressure instead of subtracted. Yeah. More important than how many shares is the competition by both entities to buy shares at the same time, right? Which drives very rapid price improvement and high volume, which brings FOMO institutionally and among retail traders. Go out of some HD 280C and 290 on the recent ups, hoping for a chance it bounces 285, 286 early this week. Thoughts? Has a nice uptrend. It just bounced on. HD's been stagnating a lot lately, but I do like where it's at right now. Um, it's starting to recover a little bit. Let me pull this back a little bit to the 4 hour. It is starting to recover a bit from this low. I think we're starting to see interest picking up, and I'm hoping that it will break back up into this like 96 to 305 range. It may stabilize again there. We may see some selling, especially from people that bought down here at like 270, 266. But yeah, it's starting to look a lot better. It's definitely coming up. And if the market continues to just remain stable, I think we'll see a lot of interest here. TLDR for what you guys talked about. Just watch the beginning of the video at like 2x speed, D-Bear. Do you see any repositioning on BBY Friday? I looked at this yesterday briefly. Let's see, options, open interest. So we saw a lot of puts opened at $1 for January. January 24. Some more short buildup in January 2023. But in a range lower than we're currently trading. That could also be, you know, just people taking advantage of the spread. If we're looking at open interest historically, so for July, yeah, we don't have the July 15 update yet. So I'll have to, again, we'll have to wait till tomorrow for that. The unknown of the X of the OI and the chain until tomorrow morning. How does GEX from in the money 130s, 135s, 140s offset the adjustment and the MM selling off their positive hedge? Well, that'll depend on if those are exercised or not, right, Dominic? If those 130s and 135s and 140s were exercised, that could create a massive amount of gamma exposure on the market maker side. We just don't know yet. I'll complain about money for my birthday. Let's say we're flat on Monday and you see a good entry for August 150s. Do you immediately set a trailing stop? And if so, for what amount? Probably like 20% of the contract premium that I paid up front. So if I get a good entry on them, you know, say they're, what are they? They're trading at like $11 to $12 right now, $12.50 I think, something like that, or that's what I bought them for last. You know, if I can get them in that price range, I'll set, you know, a trailing stop for like $2.40. That's like my max risk. With the positive delta hedge MMs are carrying, could this be the MMs are taking precautions to not get caught holding the bag on a hard run up? Yeah, it very well could be that. But to the person who asked about trailing stops with Fidelity, you can use Active Trader Pro to set up contingency trades that can sort of mimic trailing percent stop losses. There you go. You can also set them to trigger on price of the underlying too, right? The contingency trades on Fidelity, like the trade armor or whatever the fuck they're called. I'm gonna reposition on Monday. Should I hold on to August 5th 150s? Sure. I mean, we're trading at what, 141 right now? I mean, unless there's a drop off Monday, you know, a hard one, then you're probably going to lose out trying to reposition on the spread. If you're, especially if you already have the 150s. Remember, because you're taking shorter dated positions, your risk is higher though, Sahib. Don't forget that. ATP is better than Fidelity website, but not as intuitive or as flexible as Thinkorswim, WeBull desktop. Also, the IBKR desktop platform, and that shit is just rough. Yeah, it is. You get used to it though. I mean, I heard that Netflix is expected to announce another significant decrease in subscribers this quarter. Why? I mean, last quarter it was because they lost their entire Russian subscriber base. This quarter, I really don't see a reason for that. Until what day? Sorry, I lost my place. Jesus, I wish there weren't so many members. Fucking pigeon whales. What's the safer way to chase? Out of the money August or in the money weeklies? I mean, technically in the money weeklies are the safest way to chase, but you can do it either way. Is there a put equivalent to 950Cs? You can sell puts to get some equivalency. No? I mean, $1 puts, but they don't have Vega or Delta. What's up, huge Steve? I just changed my Fidelity dividend settings into, it was a deposit into core account, changed to reinvest in security. Did I do that right? I don't think it should matter. It should be just distributed as shares regardless. It's not a cash dividend. So like drip doesn't make a difference. Could you tell that kid to please get back in the shower? His mother and I are not finished in the other room. Thoughts are not necessarily the opinion of BlackRock. You also of the belief that recessions are unavoidable part of economic cycles. No. I think our economic cycles, yes. But that's just because we don't do anything to change that, right? I mean, what Powell's doing now is he's kind of trying to change that with the soft landing. You know, by deflating the bubbles, you can create a system in which, you know, exponential growth is possible as long as it slowly deflates at some point. The easier way to do it would just be to distribute corporate profits to the demand side of the economy, or a percentage of corporate profits, truly ensuring that growth could be infinite, or the illusion of it at least. You were bullish at the end of Friday. Feeling the same today? I'm feeling better about it. I like that we started to break out at the end of the Friday. That was nice. Just don't get rug pulled, because the potential's there right now. I'm gonna reposition August 5th calls tomorrow. Should I drop the 1.5 August 5th 150s or no? Okay, so I think I answered that before. If you're already in them, then you know I don't even know what the point of asking my opinion about the strategy is if you already bought into it. But no, I probably wouldn't if you start to move them, you're going to be losing money on the spread. You're going to have slippage. And that slippage may just be the difference in profits you would have made anyway if you'd bought possibly the slightly better position up front. So take that into consideration, at least when making your decisions. Do you think the RC's tweet on 331 about pets and children is him referring to Bye Bye Baby? I don't care about RC's tweets, greedy investor. Who knows? Maybe he was just having a day. How long post split are you going to wait to start selling cover calls on GMA? How long post split are you going to wait to start selling cover calls? I might sell them right away. We'll see. I don't know yet. Do you think Jimmy is likely to get shorted Monday and Tuesday to limit exposure prior to covering on Wednesday, or is this not beneficial to the entropy swap position? I mean, it wouldn't be beneficial to the entropy position. They could still do it. I don't know if we'll see that or not. Generally, you don't short something you're in the process of covering. You lay out the perfect OPEX play and tell me why it was buying September cat calls and a dip below 170. I mean, we'll see. I bought September cat calls and August cat calls. So when do we DRS cat? I'm not doing that. Cat does have a lot of employee ownership already. Is tomorrow the last possible day for a share recall because the record date? No, they can recall all the way up till the 2 days before the effective. Technically, they can force close positions right before the effective date, but they only care about the effective date. No one gives a shit about the day of record. All that happens is that after the day of record, any trade that occurs will occur with a due bill piggybacking on top of it. Yeah, if you start the stream at like 2x, you should catch up pretty fast, D-Bear. When do you see vehicle prices dropping with deflation kicking in? I think vehicle prices have already been dropping for like 2 quarters now, right? They'll continue to drop. And I'll make money on O'Reilly as people have to fix the beaters they bought during the pandemic for more money than they were worth. Thanks. I set my stops a bit wider than 20 because I've YOLO'd and wouldn't be able to re-enter until the next day. Okay. That's reasonable. Just, I mean, if you're trading an options position, make sure you're able to watch it and stay on top of it. That's the most important thing. That's where I see people lost the most money in June. The people who did lose money, they weren't paying attention. They'd walked away, they'd left, they were busy at work, taking a shit, whatever happened, they weren't watching their fucking calls. The people that were got the fuck out. A lot of them with a profit. So, that's a big part of it. Set it and forget it positions are not something that really exist in the world of trading short-term options. Is the clock ticking on their entropy swap? Yes. I mean, they're only good for a quarter and then they'd have to reposition it. Entropy right now is bottomed out. So on a macro scale, if you don't try to look at GME on like a weekly basis, at some point liquidity is going to need to be generated. If OPEX decides it wants to be a NOPEX, most likely explanation is AP's canceling out MMs just with more volatility. Other way around, but yeah. Haha, Apex. Sounds like socialism. I don't know. Maybe it does. What? Can you walk us through a hypothetical situation of how you progress through your position when volume backed run starts? Do you pivot to low theta positions? No. I mean, sometimes I'll buy, like, I'll trade low theta positions on the breakouts. Like, I'll just buy at the money weeklies and, like, wait for, like, when volume consolidates and we're going to break to the upside, and just pick up, like, 200-300% on each breakout with, like, smaller positions like that. If I buy 950s and get rug pulled and I bag hold until the next OPEX, that would be stupid. Not only because you'll have a non-standard strike post-split, but also because you'll lose theta value in them for no reason except that you want to hold, like, you want to look at them every day. I don't understand why you would hold your options through a loss, um, just to have them when you're aware that you could buy them back later for cheaper. Thoughts on entering DDS positions at its current price? Shares, since it's pretty hard to get fills on options. It looks pretty enticing. Yeah, it's very cheap right now. I agree. It's cheap. I have some that I bought. I haven't bought a lot because I'm in a lot of other positions, but I did buy some. This is the most shill question I'll ever ask. Assuming GME won't hit 950 before Jan, isn't selling CCs on those the same like free money? I mean, yeah, but it's like shitty free money, right? It's what's the return on capital? That's not very good, and you're locking up your shares for a ridiculous period of time. With all the inflation, all the economic problems in the EU now, I expect more people canceling subs. But again, Netflix blamed it on Russia last time. Maybe it's just better to stay neutral now. Yeah, you could. Um, I would say that the effects of their more recent surge in popularity with like Stranger Things and some of the shows that are coming out for summer probably won't be realized till quarter 3 anyway. Any thoughts on DDS? It's fine. I have some. I'm still really far behind. Hold on. Could it be for some reason be beneficial for them to run GME on the latest day through dark pools and halt it? And could they somehow willfully halt it for multiple days, even through the split? I don't think so. I don't think we'll see anything like that happen. That's really a stretch and very, very risky. Do you like AMD, Intel, or Micron calls? The semiconductor bill being floated around market looking to pump for this week. I mean, they may pump, but you know, you probably already missed the boat on them, right? Like you should have bought on the 5th. They're already, I mean, AMD's already up from $71, which, was just, this is just like, there's almost a reason not to buy AMD at these prices. And then, uh, chase it a little bit. I guess if you say you're confirming the breakout here at 79, it's not a terrible entry. But AMD may not, this may not be bullish for AMD, right? Bringing chip manufacturing to the United States and giving it to fucking Intel is not like a great thing for AMD. I agree it's a relief rally, but I mean, market wide, right? Next idea to get you banned, not holding through a loss. They don't want to have to burn their entropy hedge. Can you talk about the dynamics here? Hard concept for me to understand, but I think it's single use, only lasts for a quarter, offsets GME price runs for those who are short. Yep. The offsets, well, more importantly, it offsets volatility, right? Because they become neutral to volatility, and then they get to open their volatility position back at the top, right? So they short vol an intraday vol, right? Because this is being closed intraday. So like say March, intraday volatility hit like 380% on GME, right? On like that crazy breakout that halted. So say they close their entropy hedge right here. Right now they're short vol all the way back down to like 105 where we're at right now. Then the entropy hedge means that when vol moves up back to like say 220, they're not exposed to it during this period, but then they're exposed to it back here again at 220, where they get to short it back down to like 90%. So this is the purpose for the entropy hedge. Sorry, I missed that Ko-Fi. Can you give a breakdown of what percent capital you're allocating on delta levels for August 19th? I have no idea right now. Right now I have about 12% of my total capital deployed, and all of it's on far out of the money calls for the most part. With a smattering of 150s to just protect me against a breakout that could potentially happen at any time, right? I will probably allocate the rest of my capital in varying degrees to closer and closer to the money calls, like 200. I mean, it's just the strategy's really the same every time, but like 200, 180, probably 160, maybe some more 150s. Obviously, these are the most capital intensive, like the 150 and 160s. So maybe like 30% of my capital here. And then for like the 200s and 180s, maybe another 30%, which will give me more leverage. I might get some 170s too. But then the rest on the side, that'd put me at like so I have like 18% to trade with, 28% rather. No, wait. 72, 28%. And I can use this just as I see fit with price action. Or save it to exercise if I want to. Yeah, we're live. I'm just really far behind on chat. I'd probably re-enter them post-split because they're going to be 237.50 post-split, which is like a weird strike. It's like a non-standard strike. Like 230s will probably be way more popular, right? Or like 220s. And they'll have better Vega. Selling CC end to mid of this week, or expect T+2 FOMO next week. If we run super hard, I'm not going to sell covered calls till after the market maker upside hedge exhausts itself, right? Which will be like the Tuesday of, like, I wouldn't sell covered calls till after what the 26th. Why do you keep skipping my 13F RC questions about Bobby Leaps? What's the question? Probably because you're not tagging me in them, or they're not coming up in the chat. Hold on, I'm trying to find my place. For the semiconductor bill, MU and automotive suppliers like TXN and ON look better to me than AMD. What the fuck is MU? Micron? Maybe. I mean, it's not going to really affect any of them near term, right? It'd take years for that kind of manufacturing to come online. 5 to 10 years. I mean, you're just playing like the news. You're literally buying the news, right? There's no move up on Bobby on Friday. You speculated that puts expiring would be exercised to stop upward movement. What does this mean for the price going forward if those puts are gone? Well, if that gamma's gone, then the price can run. Yeah, we're live. What happens if Jimmy halts in a close Thursday, 721? How would that affect the split Friday morning, 722? And it wouldn't. It doesn't change the effective date. How's it hanging, homie? It's going all right, Dominic. I'm hanging in there. I've been doing a bunch of research on some stuff and trying to figure out if I can set up a system to use this indicator in a way we haven't previously thought about, but it'll take a lot of time. Have you talked about JFresh's chart? What do you think might happen with their delta hedge falling off? Well, we'll see if their delta hedge falls off or not. But if their delta hedge falls off, we can drop, right? No market maker supporting the price action means no price action. This may have already been answered. We're playing our favorite Where's the Volume game. Latest date ETF APs can buy into their OPEX obligations. T+3 with PM Darkpool T4. No, latest is T2 with Darkpool, so T3. I mean, technically just T2 through bell to bell T2. So, you know, Wednesday market close. I really need to write on a screen where I can see my pen. Hold on. What's the higher risk reward play? 150 weekly or Jan 950s? 150 weeklies, obviously. Jan 950s are actually like a low risk, low reward play. They're not really a high reward play unless like we get a short squeeze or something. Do you see a chance for market on top of FOMC meeting and then go for another leg down? Yeah, but I don't think we have any FOMC shit this week. Like all that's coming in this week is like home builder stuff, which I don't expect to be very good, but I don't think it'll have that big of an effect on the market either. New home sales and home builder shit. This is kind of a slow week for economic information, and that's a good thing. Like that's bullish. It'll allow probably some continued positive price improvement. Over what period of time can you judge whether you're good at trading or not? 6 months, a year, longer? Probably you get a pretty good idea over a year. Yeah, FOMC is the following week. No news is good news. Yeah. No, it is. It is. Especially right now. Subway Cup. What was the fucking question, man? You still haven't asked it. You know, just DM me? Alright, have I answered everything? Are there more questions? I finally caught up, but I may have missed some. So if I missed your question, ask it again. Now's the time. I mean, don't forget that a lot of you guys are trading a bear market right now. If you're up this year, you're killing it. Because most people are not. Favorite vape flavor and brand? I don't even care. I don't even pay attention. I just look at the number on the bottle. If RC still has his BBY leaps, why haven't we gotten his 13F? If so, thought due a week ago. Thanks, man. No positional change, so he doesn't need to file a new one. Or he's deferring reporting. Why do people care if he has his leaps? If I were him, I would have sold them the fucking day after I bought them. Or announced that I bought them. They were just leverage, right, for his board negotiations. He didn't expect, I don't think he expected the price to go to $80. If he's still holding them, then maybe he does, which would be weird. I'm doing alright, Seb. I know nothing is a guarantee, but what do you think the likelihood of 175 cat calls going up 30%? Aren't they? I mean, if you bought them at the bottom, they'd be up 30% already. I don't know when you bought them, obviously. But I think a retest of like 180, 185 isn't out of the question. Is there hope for a CLVR play? I don't know. I don't really care about it. It's interesting. I mean, if it breaks 250, maybe I'd be interested, but the options pricing's too high. I'd probably just buy puts, right? I just let it run its course and then buy puts. These cycles benefit them. Why dodge Juno packs? I mean, who's to say they're the ones dodging it, right? If they cash settled their obligations and the ETF simply takes advantage of the holiday in order to offset their own cost, that has nothing to do with the people handling volatility on GameStop, right? That's out of their hands. It kind of fucks them, actually, if the ETF does that. But that's up to the ETF, right? If you cash settle your ETF obligations, the ETF's the one going and buying the shares, not you anymore. So if you're trying to make a play on the back of what the ETF is going to do, and maybe you put an entropy swap into play, hoping that the ETF was going to go out into the market and rebalance, and they deferred it, that puts you in a shitty position as the short volatility player, right? Because now there's a deferral that you have no control over, put into place by another entity that you have to simply wait on and continue to carry a, depreciating position. You have your Guybrush hotkey ready for this week? Maybe. I don't want to tell you. Is deferment for any holiday the week of OPEX or week of T+2? It's 28 days, 28 calendar days, plus 2 days of settlement. They're allowed to settle the account out within 2 days. Right now we're trading at a higher price than the 3 days prior to the deferment. So, that would mean that they would be losing money on arbitrage, and that's, on them. They'll have to cover that difference, that negative balance difference. If we were trading lower, and that's why the incentive is for them over this last week to get the price lower, which they were incapable of doing, because by driving the price down, they wouldn't have been at spot on the deferral. So, the deferral occurs here, and we're trading here. And ideally, they would have wanted the price here to close that account next week. Now the price is higher. And that, that $20, not even $16 difference $14 difference, they'll have to make up on their own. They'll have to pay that balance difference. That's a loss, right? That's the risk of taking a deferral, is you don't know what the future price of the underlying is going to be. Hey, Pickle, I got here. I just want to say what's up. What's up, NW? Hope everyone had a good weekend. Erase some ups and downs this week. Gonna watch the stream on 2X. See you tomorrow morning. Later, man. Does the volatility at close Friday give you any sort of expectation coming into this week? I liked it. I mean, it was nice to close the week out above 140. It could create a positive GAX, which would be good. That'd be something we'd like to see, I think. Maybe JFresh would want to, I don't know, figure out GAX for tomorrow, since, yeah. How dare you withhold such crucial information? Are the obligations due this week more or less than March? Less than March. Not a lot less, more than May, way more than May, less than March. But we're also trading at a much higher price than March, with the potential for more FOMO than March. Could the ETF's motivation for dodging June OPEX also be why obligations are compounding? ETF's motivation for dodging June OPEX also be why obligations are compounding? Possibly. Or obligations are compounding because liquidity is drying up and they're being pushed out of the ETFs by other short funds. This happened, something like this similarly happened in January of 2021, right? All the ETFs over the course of 2020 were becoming very crowded with bulls, right? And with the ETFs rising, assets that were in the basket were also rising, which was putting pressure on them the opposite way. This time, they're getting pressured out because bears are coming into these indexes, other bears, and for the whole of 2021, they pretty much had free reign over the short side of these ETFs. But now, now there's other bears. There's not just them, right? They're not just alone in the position with all that ETF liquidity at their disposal. The market's down 40% this year, and bears are piling in short these ETFs, and that's drying up their ability to get liquidity from these ETFs. That, consistent buying of GameStop by retail is putting them in a liquidity crunch. And they were in a liquidity crunch in January 2021. It was just different. But one way or another, liquidity needs to be generated. That's what like our entropy thing tracks, right? Is that, you can't remove the energy from the system permanently. You can't destroy energy. And when you create a void, the energy will flow back into that. And the bigger void you create, the faster it will move in to fill that void. Will the shirt come off? I don't know. It gets people too excited, and I have to hear about it for months. Don't yell at me. I have COVID and it hurts bad. We care about RCBB Wileys because you said if he still has them, you're loading up. That's why. Well, if he does, I am, but he hasn't reported them yet, so. Thanks for the explanation. I meant, when are they able to get a holiday when are they able to get a holiday deferment? Is it when the holiday lands? It's when the holiday lands on the settlement date. Or as long as it lands in the OPEX expiration period. So I think I get what you're asking. Yeah, so if it's on Friday or it's on Monday, it doesn't matter. Either of these will grant them a holiday deferral. This one would be realized the OPEX T plus 2, so it would be like this would be realized on the Monday of the following OPEC settlement. This would be realized on the Tuesday of the following OPEC settlement. That's really the only difference here. What are your thoughts on entering some leverage buys at 2x or 5x for potential run this week? Still learning options and trying to grab some profits, average down cost basis, use trailing stop loss. Some leverage buys. Are you talking about like CFDs? I don't have those. Like I think that's what you're talking about. We don't have CFDs in the US. Or are you just talking about margining a buy-in? Like using margin to buy in? What is the anticipated highest price during the cycle? Next 2 weeks. 2 weeks out. I mean the best upside price improvement would be like gamma max plus, like conservatively would be like gamma max plus 12%. That would be like the conservative high end. Obviously it can exceed that because gamma max can increase, but no more than 12% above gamma max, wherever gamma max ends up being, which could be higher. Gamma max itself can move up 10%, 20% over the course of a run. But that's entirely dependent on FOMO. If FOMO comes in really hard, gamma max can move up really, really hard. Sorry, CFDs here in the UK. I mean, you could. The problem I have with CFDs is it seems like your guys' brokers just rob the fuck out of you on the spreads. My conservative price target 69 million. I hope you hit it, JC. I really do. For post-split strike values, which are more important, current OI or post-split? The psychological round number price. Taken August 190, 150 versus 160. 150's have more OI, but 160 will split to 40. Yep. Something to consider. Also, interest in those post-split ones will increase, which means volatility on that strike will go up. So 160 is slightly better than 150s. I know I have 150s right now, but I will be buying 160s. Provided I see what I want to see tomorrow, which is mostly the price not dropping like a rock. Few times it's gone up like 30% more than where GM was when it started. Yeah, but GM has risen, right? So, even like that day where we hit 200 in November, GM had risen above, that morning GM had risen above 180, right? So we were really only still 10% above GM for that morning. It was roughly 180. I think it was a little higher than that, but see what I mean? Is like, so, that morning's GM, no more than like 10% of that or so. And remember, when gamma expansion becomes wide enough to the upside move, that's when they want to try to collapse this in on itself. Because if gamma expands too much, they can't control it anymore, and then they could be in like a situation where they're in like a gamma slash Volga Vana squeeze, right? The volatility blows, and that's kind of what happened in January. Is like they couldn't stop the expansion of gamma because there was no upside hedge because we went off of the call chain. Yeah, they do, plus hefty charges over weekends and overnights with CFD leverages. Downside is, you said earlier, I won't be able to watch, so I might stick with 2x leverage, tight stop loss, and TPSL. That's probably, yeah, a tight stop with less leverage, I would say, is going to be a lot safer, especially if you can't be on top of it all day. Just make sure you don't get blown out on volatility. Like, confirm a trend before you try to move on anything. Because we could easily, like, fail tomorrow, right? And if the market maker deleveraging is strong, we could drop. And if that happens, you know, like say tomorrow's candle is like this. And you've bought like market open, you've put yourself in a really shitty position, right? Not that that can't like bounce into Tuesday, but then your entry Tuesday would have been way better than Monday. So yeah, I would confirm that the stock's moving the way I want it to. Especially if I was trying to use a leverage position like that. When is the anticipated highest price during the cycle? Usually it's like this Friday and next Tuesday. So this Friday is T+2 from the OPEC settlement. And then next Tuesday is the T+2 from that, right? So this is, you know, OPEX drives the initial price action, which then kicks the market maker hedging into effect. And then, you know, that creates a feedback loop with the market maker until exposure is covered. And then we drop. So you can think about OPEX as being a series of T+2 events. You have the initial covering, then T+2, then another T+2. And, you know, if interest is really high, like last June, this can keep cycling, right? Even in March, this sort of kept cycling a little longer. But if interest is low, you know, it's just a minimal number of cycles. In June of last year, into the shareholders meeting, you know, we saw from May 25th through June 9th a constant T+2 increase because, you know, FOMO upon FOMO upon FOMO upon FOMO kept pushing and pushing and pushing, which we, you know, once upon a time thought was, you know, them hedging futures positions, but this seems like a much more rational explanation. Also, a much more provable explanation. On the point you just made, how will the split on Friday impact those T+2 dates? Gasoline on the proverbial fire? Could be, or the exact opposite. If it splits and people start selling, we're going to go down. I would say the most dangerous part of this is this part of these next 2 weeks is tomorrow. Um, we're really looking for price stabilization through the day tomorrow. And then on the effective date, we want to see price stabilization or improvement. If we see improvement on both of those days, bullish as fuck. If we don't, be careful, like really careful, because we could go down fast. I mean, don't forget, there's people who are still going into this week, right, that think that they can sell their fucking shares and receive a dividend next week. I think I just covered that, Boss Blunts. What I'm looking for Monday. I'm looking for stability more than anything. Well, it's because the OPEX covering catalyzes the continued hedging. And also triggers FOMO. Since we've been shorting excessive shorting, since we've seen shorting, excessive shorting last week, could they be saving, since we haven't seen shorting or excessive shorting last week, could they be saving it up for the split on Friday to wreck us? No, I think they have no fucking liquidity. I don't think they have anything really to short with because they haven't run the stock hard enough to generate liquidity. So, you know, the ETFs are pretty dry. Even you know, XRT only has like 6 million shares outstanding right now. Sure they have other ETFs to go to, but it's not a lot. And then if they hit GME, they're gonna pump the fucking borrow rate up to like 400%. So where do you go? You know, I mean, not their borrow rate probably, but their borrow rate is also gonna go up 6x or 4x, right? Even if their borrow rate is lower through their prime than what retail sees, it's still going to go up because the lender doesn't care. They'll lend you the same share 500 times. They'll just keep charging you more for it every time. That's how they offset their risk, right? Because they'll just keep increasing the borrow rate until it's no longer desirable for you to borrow it. Because they have the power of recall. They don't give a shit if they blow you up because you decided to go short, right? Let's make a deal. If we hit 200, you keep your shirt on, but lower your camera to calf height. So your biggest concern is the MMs dumping their positive delta hedge on us tomorrow and Tuesday. Yeah. Mostly I'm afraid of tomorrow, but Tuesday a little bit. Depending on what happens tomorrow. Like if we just start moving up tomorrow and call volume comes in and we start to see buy volume come in, then I feel like that looks really good into Tuesday morning. But don't forget November. Because November we entered on a positive hedge. And we saw where that went, right? Don't get me wrong, there was a shitload of money to be made in November. But if you didn't get out in time, you got fucked. You say stability tomorrow is positive. Wouldn't hard downs not be too great for low entry points going into OPEX and split? And heavy shorting indicates they're driving lower in anticipation of covering. No. At this point in the cycle, I think any heavy downside implies that they're not covering shit. Especially if it's on low volume. So this is not the point in the cycle where they want to slam the price and then run it. If they flipped the hedge super negative tomorrow, maybe that would be bullish. But they would ramp up IV so much to facilitate that, right? Like if they tried to drop us to this lower trend in one day, IV would spike like crazy, which is not good for their covering, right? So if we were like all the way down and then rip, that would not be good for them. Could be good for us. I mean, we'd get great entries, but I'd be scared to enter at that point. How do you know we entered November on a positive hedge? Weren't we not keeping track of DN back then? We barely were. But we were over delta neutral entering November and gamma neutral. Yeah, we could still see it from back then. It's on all of our charts. I think I have them from like Yo-Yo. Let me see. I think I can pull it up if I can find it. Or it's in my daily, it might be in my daily DD. I was getting data from Yelia back then, which I don't think we were really paying attention to like what it meant. Let me see. November. January. No, maybe not. Yo-Yo might have been posting back then still. I'll have to look. I feel like we have charts from around that period, or at least historical charts that cover that period. We were definitely positive though. We went up like fucking $50 or almost, yeah, almost $50 into the Friday of that week. We also crossed Gamma Max in November. That I do know for a fact. So yeah, we were definitely on a positive hedge. I'll try to find it. I know I have it somewhere. Are you currently wary of holding calls open overnight? Not really. I'm not super scared of after hours price action, to be honest. Do they not want to bring overall variance up for their swap? I mean, they want to bring volatility up, but I don't think we've ever seen them try to crash the price during a settlement period because there's, you know, they're not the only ones covering, right? And if they present the opportunity for a cheaper price to another entity, they're going to blow out their own short position. Assume that, you know, the ETFs and MMs are covering independently of each other. You know, if the ETF tries to, you know, tank the price in order to cover, or the market maker tries to tank the price and then cover, you know, the other entity can take advantage of that drop in price. Also, there's not a lot of ways to tank the price besides selling. And XRT is kind of fucking bone dry right now. I mean, there's still a little bit of like liquidity, like a liquidity differential as of the close on Friday between GME and XRT. You know, even if they close that gap, then there's a little more liquidity in XRT, but not a lot. Like maybe enough to stabilize price, but not enough to drop it hard. And then you have covering, right? Like we still expect ETF covering. You missed my Ko-Fi. I'm sorry, dude. If I was looking at Jan 23 leaps to lower my chances of getting burned, just holding through the split if no run, what strikes would you look at? I was thinking with some 160 or 180. Yeah, anything divisible by 4, evenly divisible by 4, is better than something that isn't. Yeah, 160s and 180s don't seem bad. I mean, it's not crazy price target, but I don't know if I'd want to hold them through the split. I still really would rather reposition after the split chain opens up, and you could, so if the split chain draws a lot of interest, then the value of your contracts could go up because volatility on those strikes could go up, and the spread could narrow. But at the same time, you know, there could be a big sell-off post-split, and then you're just holding those until the next run. I don't know who you are. I don't know what you want. If you're looking for a ransom, I can tell you I don't have money, What I do have are a very particular set of options, 510 options. Is this the split is on my anniversary? Does that mean my wife's preggo? I don't think so. All right. I think I've answered as many questions as I feasibly can going into tomorrow. Pickles picks for those of you guys that are Dillionaires will be out tonight, later, obviously. Like around 11 or midnight, most likely. For everyone else, well, see you bright and early tomorrow. If you guys had a question and you were unable to ask on stream, or I didn't get to it, feel free to DM me over on the Discord and I'll try to answer it when I have some free time later tonight. Thank you all for tuning in, and I will see you tomorrow morning. Have a good one.